This is a download from BFM 89.9, the business station.
Good morning, Dodge. The US is coming back alive after a long sleepy weekend following the Labor Day holiday. And while we wait for the September rate decision, what would be your expectations on this?
Well, good morning, Ibrahim. Yes, we are getting up after a long weekend, and the news on the wages and employment on Friday were not particularly positive. I suspect the market is looking for a rate increase, but it may very well not get it. The Fed does need to move, otherwise it will lose some of its strength in its ability to move to support the markets. But whether or not we get it, it's too much. It's too close a call at this point, and that's what we're seeing in the markets. We're continuing to see sector rotation over here. Right now, some of the stocks that move, like Facebook, Amazon, Netflix, Google, the FANG group, they're getting their sector rotation now, and we're not really seeing much volume at this point. There's not much of a decision that's being made in the market now, and I suspect that it's going to continue that way for the next 4 to 6 weeks.
So you touched a bit about the FANG stocks, Facebook, Amazon, Netflix, and Google. Do you think they have the necessary momentum to sustain their climb for this year?
No. Yes, they do in terms of their own strength, but no in terms of the full market. The economy, our economy over here, is really not strong enough to support the levels that we're seeing in the major averages. Even here, Ibrahim, if you were here in New York City, you would see a lot of construction going on. Construction in the streets, some of the buildings are being repaired. But as you go down the streets, you're seeing a lot of stores, a lot of retail, and the restaurants are closing and have been closed. And that's just not supportive of the levels that we're seeing now. Yes, Facebook, Amazon, Netflix, Google, they have the disruptive possibilities, and that they will be the winners over the longer term, but they are going to have to face an economy that's not going to support the momentum that we expect to see. But they will be leading the market. They're in the limelight right now because they have the formula for success given the economy as we see it today. But the problem is the economy is not strong enough for them to continue. And so we suspect that there will be a pullback. No, you cannot anticipate the pullback until it comes, because as you've seen, Ibrahim, our market continues to be strong relative to other markets. So we stay focused on them. We think they're good for the short term, but we're not ready to make the longer term bets because we expect that there'll be a better opportunity in the future.
Considering where we started off and heading into the final quarter of the year, can we expect the markets to move much for the rest of the year?
If you were to look where we are today and then look at the end of the year on December 31st, the answer would be no. We suspect that there will not be much movement. However, because we expect to have a great deal of volatility, particularly as we get into the first week of November, we suspect that those who are the nimblest, the ones that are the quickest to react to movements in the stock and to get out quickly and just to take the profits, will be the ones who win. No, this is not good for the market. It's not the way to make money on a longer-term basis, to grow wealth over the longer term. But that's what we expect to see until there's some decisions that are being made, and that will occur as we get into November.
Shifting away from the U.S. markets into oil, Saudi Arabia and Russia right now have agreed yesterday to cooperate on a bid to stabilize the output of oil. Do you think that there's a lot of skepticism going on with these two countries when it comes to oil output freezing?
Yes, I do, and I am skeptical also. Russia and Saudi Arabia are talking a good deal, but it will need more. It will need action. Both need closer relations politically, so there's a reason for them to say all the right things. But market forces will not provide a real opportunity for effective cooperation in terms of oil. What will make the oil, whatever they're going to do in terms of compromising and agreeing in the oil area, will really be created or will require some other benefits for both Russia and Saudi Arabia outside the oil area, and in terms of politically. there's no harm in having a few additional meetings and coming up with mutually supportive statements, which is what we're saying and will see. But it'll be very clear when action occurs, and that's what the market will need in order to really buy into it longer term.
Do you think that U.S. shale producers will react following the OPEC meeting that will come up soon?
Yes, I do. I think that they're becoming more economical. I think they're finding ways to cut costs of production. And so, yes, I do think that they'll react. I think their price will start to come down relative to the cost of production. And so I think they'll become more competitive and more of a longer-term opportunity. And it will be a factor that Saudi Arabia, Russia, the oil community is going to have to take a greater measure of.
So you were touching on this notion that there may not be necessary economic strength to support the lofty levels that the U.S. markets is actually experiencing. Do you think that the U.S. dollar is set for a weakening going into the rest of the year?
Interesting. I think that there will be enough volatility. I don't think the volatility in the U.S. dollar will be on a daily basis. I think you'll start to see some trends that will last days to 1 or 2 or 3 weeks. I think the trend will continue, will be on the downside for a while, but I do not see that as a longer-term direction. I think ultimately as we get into the new year, I think then you'll see a further strengthening of the dollar, but maybe not as much in terms of force and magnitude as what we've seen in the past.
Pleasure speaking to you. That was Dorland, Chief Investment Officer at Landor Fuse Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.